prevent and detect errors and fraud.
To ensure policies of an organization have been adhered to consistently.
Exactly, to ensure that the policies of the organization have been adhered to consistently.
To ensure that a company achieves its objectives.
To ensure that the company achieves its objectives.
To ensure security of proper documentation and accounting.
To ensure security and proper documentation of accounting records. Thank you so much. Thank you so much. Now I want to talk to who? Shentrak. Shentrak, very quickly, help us to remember inherent limitations of internal control systems. Shentrak, can you hear me? It's like Shentrak can't hear me. Yes. Talk to me, bro.
I can hear you, but I need assistance there.
Oh, okay. Choose anybody of your choice there. If from that list, choose anybody of your choice to help you.
Olivia.
Olivia, can you hear me?
Mwalimu, sorry, I have internet issues kiasi. I'm sorting.
Oh, okay. It's okay.
So maybe I can come in.
Yes, please come in, Shedra.
Limitations of inherent risks.
Yes, limitations, that is inherent limitations of ICS, inherent limitation of internal control system.
One of the limitations is human error.
Yes, human error.
The other one is bypassing of the control systems.
Bypassing of controls.
Yes.
You still have some more to go.
You can assist with the rest now.
Collusion, we have that collusion. Cost versus benefit. And also we have one-off transactions. I think the last question that maybe I can ask, 2 ways of evaluating the control system. I will talk to you. Yes, Bernard. 2 ways of evaluating internal control systems. It's like Bernard can't hear me. It's like Bernard can't hear me. So let me talk to you. I think the last person is Isabella. Have you answered any question?
Yes, I have.
Okay. That must be Mercy K. Have you answered any question?
No, I've not answered.
Please talk to us. How do we audit internal control system? All procedures of ICS.
You ascertain whether the ICS exists.
Yes, ascertain whether the internal control system do exist.
Then you have the walkthrough test.
Yes, you do what?
You do a walkthrough test.
You record the ICS. Either in form of flow chart or maybe in form of questionnaire or maybe a narrative.
Then you do a walkthrough test.
You walk through test.
And then finally you evaluate.
You do an evaluation. You evaluate. Then after evaluation,
you do compliance testing.
you do compliance testing. After compliance testing,
You do a substantive testing,
Substantive testing, right? You do substantive testing.
then you form
After
a
substantive
conclusion.
testing, what do you do?
You form a conclusion.
You form a conclusion. Thank you. You form a conclusion. So we borrowed the two types of evaluation from that on procedure, whereby we said we have ICQ and ICEQ, whereby that we said ICQ, this is data control questionnaire, which is used to test the weaknesses or the strength of ICS. Then number two, we said we have ICEQ, which is used to test efficiency and effectiveness of internal control system. Now, the information that you get after you have done your evaluation, after you have gone through the procedures that Mercy has told us, then from there you gather sufficient appropriate evidence that will help you to form an opinion. Meaning, after you have done whatever you have done in the HCS, you are supposed to form a conclusion. You form a conclusion based on the evidence that you have gathered from. And now, our today's discussion starts from there. That is audit evidence. Our next chapter, that is audit evidence. Audit evidence. Audit evidence. That is IAS 500. Audit evidence, that is IS 500. Now, in this topic, I want us to understand what is an evidence, that is definition of an evidence. Then from the definition, we also need to understand types of evidence that you can have. Then from there, I will introduce qualities of good evidence. Qualities of good evidence. Then from there, after qualities of good evidence, I think we also need to discuss now the financial statement assumptions. The financial statement assumptions. Now, after financial statement assumption, I'll be introducing audit techniques. Audit techniques, or the procedures, ways of gathering evidence. Techniques, ways, methods of gathering evidence. Ways or methods of gathering evidence. Then from there, of course, after you have worked on the ways and techniques, I can introduce subsequent events or post-balance sheet events. Or then from there, of course, we can discuss a going concern. But for today's engagement, we will start from there. We want to understand what is the definition of evidence, and borrowing from what we have just discussed, the few questions that I've asked you, we have said the information that we get after we have examined the subject matter that comes from our topic one. I want to talk to Annette. Annette Diwa, how are you? Can you hear me?
I'm fine, Mwalim, I can hear you.
Thank you so much. Please remind us elements or components of assurance engagement. Elements of assurance engagement. Now, it's like you have some network issues, but I will help her because of time. She has some network issues, and yes, we say we have 5 elements of assurance engagement where we were discussing CREST. That is the criteria. We said we have evidence, subject matter, evidence, and three-party relationship. Now, so we say subject matter. This refers to the outcome information that you get after you have examined a subject matter. Now, from that, we have just worked on one subject matter, that is internal control system, whereby we have said internal control system, there are some procedures that we're supposed to use when we are on the internal control system, and the outcome information that we get is now what we call an evidence. Meaning, when you talk about evidence, this refers to the outcome information evidence. This refers to the outcome information that you get after you have examined a subject matter. Repeat, evidence. This refers to the outcome information that you get after you have examined a subject matter. After you have examined a subject matter. Now, we have three types of evidence. And this one not somewhere because you don't see it in your notes. Types of evidence. Number one, we have primary evidence. Number two, we have secondary evidence. After secondary evidence, number three, we have hearsay evidence. Then from there, of course, we have circumstantial evidence. So we have four types of evidences that you can have. One, we have primary evidence, secondary evidence, you can have circumstantial, and of course, you can have an hearsay. Remember, we have said evidence. This refers to the outcome information that you get after you have examined your subject matter. The outcome information that you get after you have examined the subject matter, that's what we call an evidence. And we have said we have four types of evidences. Number one, you can have primary evidence. Now, primary evidence, this is an evidence that you get from within the organization that you are auditing. I repeat, primary evidence, this is the evidence that you get from within the organization that you are auditing. Meaning, when I'm examining the books of account, when I'm evaluating the books of account of this organization, when I'm talking to the management, when I'm talking to the employee, the information that I get from the organization, that's what we call a primary evidence. Then number two, we have secondary evidence. Now, secondary evidence, this is any information that you get from a third party. This information that you get from a third party or a person who has some interest or who has some concern or some engagement with that organization. Meaning, if I talk to a company's lawyer, if I get a statement from the bank, if I talk to the debtors or maybe creditors of that organization, I'm gathering this information from a secondary source. Meaning, secondary evidence, this is any information that you get from a third party. Now, e.g., if I'm doing bank reconciliation, when I'm doing bank reconciliation, I need to have the cash book, and I also need to have the bank statement. Now, the information that I'm getting from the bank statement, that is secondary evidence. That is secondary evidence. Now, the information that I get from the cash book is the primary evidence. Listen something. Secondary evidence is more reliable than primary evidence. Secondary evidence is more reliable than primary evidence, meaning I'll be more comfortable getting this information from a third party than from getting information from within the organization. Now, if I have to get information from within the organization, then we say evidence is reliable from within the organization if the internal control system are strong. I repeat that point. Evidence from within the organization is only reliable if the internal control system are strong. Of course, we'll be getting that in the next area where we'll be discussing qualities of good evidence. Then number three, we have hearsay evidence. And please, after you just note this somewhere, because in the notes that I'm going to give you, will not see that. That will not be able to see that. But of course, I want you to get this from the board. Meaning, hearsay evidence, this is information that you get from grapevine. Listen to me, somebody who want to become an auditor. The grapevine that you can hear from employees, that information is very important. The grapevine that you can hear from any person who has some knowledge about the organization, that information is very, very important. Now, let me just give you a practical example. Sometimes back, we used to talk of KEMSA. We used to hear some KEMSA. And some of us, we associate KEMSA with some of the events that we are seeing, issues of corruption and all that. Now, sometimes back, we used to hear issues related to NYS. And then from there, the only information that we got is about issues of maybe fraud within that organization, meaning some of this information, they get them as grapevine, but that information is very, very important for you as an auditor. Then about next, we have circumstantial evidence. Now, circumstantial evidence, this is an evidence that you get direct, mean this information that you witness. You are doing and you're auditing internal control system. You are seeing people as they do their payment. Someone is paid the creditors. Someone is paying wages and salaries. So you are there witnessing. When they pay, this is what they are doing. Someone has to sign somewhere, someone has to append signature, someone has to indicate his service number, someone probably has to maybe do something in for him to get these returns. Meaning, when you are your witness activities as they take place, especially when you are monitoring internal control system, we say that we are having circumstantial evidence. Meaning, circumstantial evidence, this refers to evidence that you witness, evidence that you get through an observation. Now, this is a direct evidence that you are getting you yourself as an auditor. Please don't forget the 4 types of evidences: the primary from the organization, secondary from a third party, hearsay from grapevine, and circumstantial information that you get through observation. Then from there, let's go to the qualities of good evidence. Qualities of good evidence. Qualities of good evidence. Qualities of good evidence. Now, we have 2 types of evidences, 2 qualities of evidence that are very important to you as an auditor. I repeat, we have 2 characteristics of good evidence. Characteristics of evidence. Now, an evidence must be appropriate and sufficient. We always talk of sufficient appropriate evidence. So we have 2 characteristics of good evidence. Number 1, we have sufficient evidence. And number 2, we have the primary evidence. I repeat, appropriate evidence. We have sufficient evidence and appropriate evidence. Now, sufficient evidence, this is used to determine of this. So you have sufficient evidence. This is whereby you are interested on the quantity of information. Appropriateness of evidence is so about the quality. Please have a follow. Under the 2 characteristics of evidence, we have said evidence must be sufficient and evidence must be appropriate. Now, sufficiency of information, this is all about the quality, meaning it's all about you have enough evidence that can help you to form an opinion. Now, if you're working on appropriateness, this is whereby you are interested on the quality of information that you have. Now, you can ensure that you have sufficient evidence if you can afford to clear the professional doubt that you might have as an auditor. Please, this is very important, somebody. Evidence is sufficient if it can clear the professional doubt that somebody might have. I repeat that. Please, if you can afford to note somewhere, just note somewhere. Evidence is sufficient if it can afford to clear the professional doubt. Another definition, evidence is sufficient if in conjunction with another audit procedure, the auditor arrives at the same conclusion. Meaning, evidence can be sufficient if you use a certain audit procedure and another person uses a different procedure, but you arrive at the same conclusion. Meaning, somebody can do recalculation, somebody else can do circularization, but the outcome information that you're going to get the same result. Then we can say that we have sufficient evidence. Meaning, if we can afford to clear the professional doubt that you have as an auditor, then that evidence is sufficient. Meaning, sufficient is all about enough. You can ensure you have sufficient evidence by growing element of professional skepticism, which will help you to increase your sample size which will help you to increase your sample size and choose the right on procedures. Use of right on procedure. Meaning, evidence is sufficient if you increase your sample size, or you can ensure sufficiency of information by increasing your sample size and choosing the right on procedure. Meaning, for you to have sufficient evidence, that means you need to grow element of professional skepticism. Please, someone not someone. Professional skepticism. We say professional skepticism, this refers to the attitude of questioning mind that something could be wrong. I repeat, professional skepticism, this refers to the attitude of questioning mind or having doubtful mind that something is likely to be wrong. Meaning having doubtful mind, meaning sufficient information for you to get sufficient evidence, then you need to grow element of professional skepticism in order to help you to increase your sample size and choose the right audit procedure. Now, when we talk of appropriateness, we are saying this is so about the quality of evidence that you have gathered. Now, you can ensure that you have appropriate evidence by considering the evidence that you have, whether you are getting it from the reliable source, meaning under appropriateness, you are interested on the reliability of the source. And number two, the relevance of evidence. This is somebody. Evidence is appropriate if you consider the reliability of that evidence and the relevance of that evidence. Now, let's work together this point. We consider the reliability of evidence by evaluating where are we getting this information from. Meaning, evidence is reliable if you get from the right source. Meaning, you get information from the right source, then you can conclude that you have credible evidence. There are some two terms here I'm using: the reliability of evidence and credibility of evidence. Now, evidence will always be credible enough if you get that evidence from a reliable source. I repeat that. Evidence is credible enough, or evidence is credible if you get that information from the right source. Now, this is to imply, number one, evidence from an original document. Evidence from original document is more reliable than evidence from a photocopy. Meaning, evidence is reliable by considering the source. If you have this information from original document, then you can conclude that evidence is credible enough. Meaning, the credibility of evidence will increase if you get this information from an original document and not a photocopy. And that's why every time when someone asks you of your photocopy of your certificate, someone will tell you, give me or provide certified document. Meaning, when you're doing certifications, whereby someone has the original document and he has a photocopy, so you will sign that photocopy as a copy of the original document because you have seen it. Meaning, evidence from an original document is more reliable than evidence from a photocopy. Number two, written evidence. Number two, written evidence is more reliable than oral evidence. Written evidence is more reliable than oral evidence. Meaning, if I want to gather sufficient appropriate evidence, I will consider by the end of the day, for me to ensure appropriateness, I will consider this evidence. Is it written or is it oral? If that evidence is written, then I'll conclude the credibility of that evidence is okay because we are getting this information from a written document and not an oral copy. And that's why when we be discussing techniques of gathering evidence, one of the remarks we make is that after we have used any technique of gathering evidence, then we are expected to request for management representation letter. Meaning you are requesting management representation letter to affirm any form of oral communication that we had with that management. Number next, evidence from a third party, evidence from a third party is more reliable than evidence from within the organization. And that's what we have just discussed. I repeat that. Evidence from a third party is more reliable than evidence from within the organization. Meaning, I'll be more comfortable do data circularization to get this evidence from a third party other than just evaluating the books of account of the organization. Meaning, evidence from a third party, meaning secondary evidence, is more reliable than primary evidence. Then number next we say evidence from within the organization. Evidence from within the organization is reliable if the internal control systems are strong. Evidence from within the organization, evidence from within the organization are only reliable if the internal control systems are strong. If the internal control systems are strong. Then from there, we see direct evidence is more reliable than indirect evidence. Direct evidence is more reliable than indirect evidence. Then finally, evidence from an independent source is reliable. Evidence from an independent source is reliable. Evidence from an independent source is reliable compared to any evidence from that one area which is not independent. So please add those two characteristics, very important. Always this is a question that someone will ask you. Someone will ask you the reliability of evidence. How do you ensure reliability of evidence? Tell this person if the evidence is from original document and not photocopy, if evidence is written and not oral, if evidence is from independent source, if evidence is from a third party, and if evidence is from within the organization, if at all the internal control system are strong. And that's the end of that part. Please don't forget the two characteristics. Remember, under sufficiency, we are saying so about the quality. Appropriateness is so about the quality. How do I ensure sufficiency? By increasing my sample size and using the right audit procedure. Then from there, we go to the next item, financial statement assertions. Financial statement assertion. Financial statement assertion. This one you have to listen very keenly, because now from this assertion, we will be going direct to audit techniques. And audit techniques, this one area that will never miss in your sitting, including the exam that you are waiting for next month. Somebody follow? Financial statement assertions. Financial statement assertions. Financial statement assertion. Now, before I go to financial statement assertion, there is something that I've just remembered I forgot to mention. When we are discussing characteristics of good evidence, we have said we have two characteristics. Number one, we have just talked of sufficiency of evidence, sufficient evidence, and number two, we have talked of appropriate. And the sufficient, we have said, this is whereby we are interested on the quality of information, and we can ensure the quality of information by increasing our sample size, increasing the sample size, and number two, getting the right use of right on technique. There's something else that we have talked of is about the appropriateness. We have said appropriate this so about the quality of information and we have agreed for us to ensure we have appropriate evidence, then we need to consider the credibility, and of course the credit, I not credit, but the reliability. The reliability of the source and the relevance. The relevance of the evidence. Now, under credibility, we have agreed that you can only ensure the credibility of an evidence by considering the reliability of the source. Meaning the credibility of evidence is increased depending on the reliability of the source. Now, this is what I've not mentioned about the relevance. Now, when we talk of relevance here, evidence is relevant if it can answer the three categories of financial statement assumptions, the three categories of financial statement assumptions, and the two categories of internal control system assertion. That's what I did not mention, very important for you. Meaning, the relevance information for us to have appropriate evidence that is relevant for use, we have to consider that evidence that we have at hand. Can it answer the three categories of financial statement assertions and the two categories of internal control system assertion? Of course, I'll be introducing you to the next three categories of financial statement assertion, but one thing you need to note, under the three categories of financial statement assertion is now what I'm introducing to you in the next 2 minutes. Now, we say that we have two categories of internal control system assertion. We have two categories of internal control system assertion. Number one, we say in its design, the internal control system should be able to prevent and detect errors and fraud on timely manner. I repeat, in its design, the internal control system should be able to prevent and detect errors and fraud on a timely manner. Then number two, in its operation, the internal control system should be able to prevent and detect errors and fraud efficiently and effectively. Not the two. We have said we have two categories of internal control system assertion. Number one, in its design, and number two, its operation. Meaning, in its design, the internal control system should be able to prevent and detect errors and fraud on a timely manner. And in its operation, the internal control system should be able to prevent and detect errors and fraud more efficiently and effectively. Now, for the three categories of financial statement assertion, that's what now I'm introducing you to. So, under financial statement assertions, we have three categories of financial statement assertions. We have three categories of financial statement assertion. We have three categories of financial statement assertion. We have three categories of financial statement assertion. Number one, we have assertions about classes of transactions. Number two, assertions about account balances. And number three, assertions on presentation and disclosure. Now, listen something. So we have three categories of financial statement assertion. Number one, assertion about classes of transaction, assertion about account balances, and assertions on presentation and disclosure. Listen, when we talk of assertions about classes of transaction, here we are referring to all items in the income statement. Number two, when you talk of assumption about account balances, this is whereby we are interested on all items in the balance sheet. When you talk of assertion on precedent disclosure, this is whereby we are showing people how the financial statement has been presented for the purpose of understanding. And for more understanding, I think I need to introduce the two statements. I want to introduce the income statement and kind of a summary income statement, and also I also need to introduce a balance sheet, just a skeleton of the financial statement so that I can then try my point on. Now, let's assume this is our income statement. This is our income statement. I'm leaving this first of all, I'll be introducing techniques and I'll use the same statement. So income statement for the year ending, blah, blah. Now, on an income statement, we have income. We can talk of such, we talk of income, note one, financial year 20, let's use 2022 and 2023, 2022 and 2023. This is 2023. Please make sure that your neighbor doesn't sleep. 2023. Now, this is in form of millions. As I say, this is millions, 1,000 times thousands. So, the first disclosure, that is our income. It is income. 2022 get income of 250,000. This year we had income of 300. This is our total income, not one. Then from income, of course, we had, let's talk of maybe direct costs. Let's direct costs. And direct costs, last year we had costs of maybe 50,000. This year we had a profit, expenses of maybe 100. Now let's say maybe 150. Then of course, this gives us what? This gives us, this is 150, this is 200. Then we had, of course, other expenses, not today. Let's talk of, we had other expenses of 20,000, year with expense of maybe 5,000. No, let's talk of 15,000. This is better. Let's have 20,000. So on gross profit here before tax for 2022, this is 180. For 2023, this is 130. These are our profits. Profit before tax. Now, let's go to balance sheets. We have a balance sheet. That is financial position. This is financial position as at 2022, 2023. Now, of course, we had non-current assets. Let's go to note, this was note 3, so we have note 4. Last year, our assets were 550. Of course, this in form of 1,000. This year, 600. Current assets, not 5. Our asset for last year was current assets 50. This year was maybe 100. So our total assets, this is 600, this is 700. Then from there we have, let's add total liability because of time, liabilities, total liability, that is short-term and long-term liabilities. To save time. We had liabilities, this is not 6. Last year we had a profit liabilities of 20,000. This year we have liabilities of maybe, let's talk of 15. Then our capital, obviously, this is 580. This is 85, 685. So our total liability, our total liabilities, of course, we'll have, this is 600. And this is 10, 0, 1, 10, 700. So our account is balanced. Now, listen something now. We have said, when we talk of financial statement assertion, let's get from understanding what is an assertion. An assertion, this refers to a statement or a representation made by management when deciding to include or to exclude an item in the financial statement. I repeat, an assertion, this refers to a statement or a representation made by the management when deciding to include or to exclude an item in the financial statement. We have said we have 3 categories of financial statement assertion. Number 1, we have assertion about classes of transaction, whereby assertion about class of transaction, we have said that we are referring to all the items in the income statement. That's why I've just brought this so that we can agree. Meaning, when we are talking of assertion about class of transaction, here, this is whereby you are confirming you're working on items in the income statement. Meaning, somebody will give you income. It is your business or responsibility as an auditor to confirm whether actually that income occurred. Meaning, number 1, occurrence is an assertion under classes of transaction. Meaning, if somebody has given me income of 2 million or income of 3 million for this year, then I am ready to confirm, is it possible, there is possibility that this transaction, they are not real, meaning an occurrence, it means this transaction must be real. Must be real, meaning that transaction must have taken place. Must have taken place. Meaning, it's possible that somebody can indicate an income that actually is not real. And that's what we see. We have effects of business risk to financial statement, where we say, because of business risk, we expect the income statement and the balance sheet is like to be overstated, meaning the assets of the company and the income of the organization is like to be overstated. So it's possible This 300 is likely to be overstated because the company has some element of business risk. And now I just remember, what are the components of business risk? Olivia. Components of business risk. Olivia, can you hear me? If Olivia can't hear me, can someone, Isabella, talk to me now. Isabella, components of business risk.
The operational, financial, compliance, and external.
And external, thank you so much, and external. So we said we have 4 components of business risk. And for those components of business risk, we say it could be possible because of business risk, the assets of the company and the revenue is like to be overstated, meaning it's possible this 300 might not have occurred. So when I'll be initiating my own procedure, someone listen to this. When I'll be initiating my own procedure, I want to confirm that income somebody is talking about, has it actually occurred? Is it real? Can I confirm? That can be confirmed. Number 2, it's my business to ensure that there is no omission. Mean number 2, we are talking of completeness. Meaning it is our business to confirm that any information that will be given in income statement is complete. Because we also discussed, because of business risk, we expect the expenses of this organization and the liabilities are likely to be suppressed, meaning they are likely to be omitted. Meaning completeness means no omission. Meaning completeness means no omission. It's my responsibility as an auditor to confirm that any income, any expenses or liabilities that have been captured in totality. So I'll need to initiate another procedure that will help me to confirm that there is no omission. Then number 3, cut-off stroke measurement. Cut-off stroke measurement. Now, cut-off stroke measurement, this means the information that has been disclosed for that specific financial period that you are auditing. Meaning, if I'm auditing financial year 2022-2023, then I expect all the income that has been captured for within that period. Meaning, if I pick from January up to December 31st, any transaction that should be captured has to be captured for that specific period. Meaning, cut-off or measurement, you are interested in the transaction that took place within that financial period that you are auditing. Then the last item, classification. Now, classification, this means that any information that has been disclosed belongs to that class that you have captured. Meaning, if it's an income, it is income. I can have income from operating activities, and we can also have income from operating activities. Meaning, if I go to my additional notes, I'll be able to see that any information that has been given there has been captured in the right class. Meaning, classification, this means information within that class that you expect. So, for this understanding, we have 4 assertions under class of transaction. Number 1, we have occurrence, completeness, cut-offs of measurement, and classification. Please don't forget those 4 assertions. Then number 2, we have said we have assertion. Number 2, we have assertion about account balances. Now, when we talk of account balances here, this is where we are referring to all transactions that are in the balance sheet. Meaning it is my responsibility as an auditor to confirm that those transactions that have been captured in the balance sheet, those balances that we have included in the balance sheet, actually they do exist. Meaning existence is an assertion about account balances. Somebody has given you an asset worth 600,000. I want to confirm they exist, as this can be confirmed. Meaning, when you will be initiating your own procedure, you want to confirm those assets, are they there physically? Because I can see them. If you have given us data's account, can we actually confirm those data's account, those datas? So if I do circularization, someone should give me either positive or negative circularization of their existence. So I'm interested to confirm that disclosure that someone has given me in the balance sheet, actually, it does exist. Then number two, right and obligation. Right and obligation. Now, the right and obligation, this is whereby we are interested, right and obligation. This is whereby we are interested to confirm we have ownership of those assets, and if it is liability, we have obligation of such liabilities. I repeat, and the assumption about account balances, this is whereby we want to confirm rights and obligation. Meaning, I want to confirm we have the right over those assets, and if it's liability, we have an obligation to pay them. Meaning, when I be one of those liabilities, I want to confirm, is there a possibility of a liability that have been captured in the balance sheet which does not belong to the company? Because I know somebody can incur liabilities, that is personal liabilities, and disclose that in the balance sheet. So I want to make sure that when I want to confirm if it's an asset that someone asked for, given us there, we need to confirm they exist and we have the right over those assets. As this can be confirmed, we can see if it's a motor vehicle, we have the logbook. If it's maybe a piece of land, we have the title. If it's any kind of shares, we have certificate of them to confirm. Now, again, liability, we need to confirm this liability that will be given. We have an obligation to pay as an organization. Then number three, I also want to confirm valuation and accuracy. Valuation and accuracy. So, an valuation and accuracy, this is where I want to confirm the information that will be given there. Because somebody somewhere has given us the net book value, the carrying amount. I want to understand this carrying amount has it been calculated correctly, as that is the value of those assets, and we have the right value. Someone has done revaluation of assets. The value that we are seeing in the balance sheets. Someone has told us we have done a kind of asset of 600,000. If we calculate the carrying amount, whatever has been disclosed as net book value, is that amount correct? So if there's any subjection of depreciation charge, if we take the cost less the accurate depreciation, the amount that has been given in the net book value is it the correct amount? Then finally, number four, we have to confirm completeness. Meaning completeness here, this is where we want to ensure that there is no omission. Meaning, not this. Completeness applies in both assertion and the classes of transaction and under account balances. So it's our business to confirm completeness. And now, this is what you do. This is all about auditing. Every time, remember, you'll be given the financial statement the way we have been given there. So our business, as long as we'll be given the financial statements, our business is to confirm occurrence of the income statement, completeness, cash approximation, and classification. That is the income statement. So when we'll be initiating our own procedure, we'll be initiating our own procedure to confirm whether this is real. So I want to do an inspection. I want to do recalculation. I want to do performance. I'm doing this to confirm occurrence, completeness, cash approximation, or classification. Someone has given me the balance sheet. Now, any transaction in the balance sheet I want to confirm existed. These physical assets, can I see them? Do we have ownership of those assets? Have they been disclosed at the correct carrying amount? Is every liability that should have been captured has been captured? Because there is something that we have agreed. We know there is effect of business risk to financial statement, and nothing else, I need to get this clear. I want to talk to who? Bernard Owino, please talk to me, bro. What are the effects of business risk to financial statement? Bella, can you hear me?
Oh, sorry, Marie, I have a network issue. I'm using Airtel.
Yes, bro. Bella, you are saying something? It's like Bella can't get me well. Let me talk to who? Vincent. What are the effects of business risk to financial statement?
The income statement would be misstated.
There is possibility of financial statement material misstatement. Yes, financial statement material misstatement about 2.
Nisaidie mwalimu.
Okay, choose another person of your interest other than mwalimu akusaidia, anybody of your choice.
Kendra.
Sheldrak, let's do this, bro. Effects of businesses to financial statement.
Possibility of errors and fraud.
There's possibility of errors and fraud.
Incomes and the assets. There's possibility
Income
of
and the assets are
overstatement
likely
of
to be
income.
overstated. Yes,
Understatement of the
understatement of
liabilities
liabilities and expenses.
The policies of the
The policies of
organizations
the
may not be
organization are
adhered
likely not to be adhered to consistently.
Yes.
The policy, exactly. Yes, so listen, somebody. Probably in our level, we might not be tasked to do much of this in our exam, but of course, in our next level, this is what we'll be doing, whereby you'll be expected to audit. But because we have to discuss techniques of gathering evidence, for you to understand the techniques of gathering evidence, then you need to understand how do I use my own procedures or techniques of gathering evidence to gather any information in the balance sheet or income statement. Because ideally, when you are doing your audit work, this is so about confirming assertions. Meaning, during our final audit, you remember we discussed different types of auditing, whereby we were categorizing them based on the nature of work and based on approach. Whereby we said we have internal audit, external audit. Then further we said we have interim audit, final audit, procedural audit, continuous audit, balance sheet audit, etc. So when you are doing your final audit, you are interested on assertion. Remember, we said assertions. This refers to a statement or a representation made by management when deciding to include or to exclude an item in the financial statement. So when we initiate your own procedure, you want to confirm this. So I'm going to kuuliza, okay, fine, I've given you the balance sheet. What do you want to understand the balance sheet? Number 1, I want to confirm those assets, do they exist? And can I physically see them? So the next question I'm going to ask you, how do you confirm that? That's about the audit procedure. I need to do an inspection, observation, recalculation, reperformance, etc., depending on what I'm working on. So meaning the basic issue about income statement or the balance sheet, your business is to confirm the assertion. Now, with that, then you need to understand which is the right techniques to use when you're gathering evidence. Then the third financial statement assertion is assertion about presentation and disclosure. Now, simply with under presentation disclosure, this is how well the financial statement has been displayed for the purpose of understanding. I repeat, presentation disclosure. This is all about how well The financial statement has been presented for the purpose of understanding. I want someone to see my financial statement. When I was preparing my financial statement, I got income, note 1, I get 22, 23. Costs, 22, 23, note 2. Other expenses, note 3, 20. Balance sheets, non-current assets, note 4, 550, 600. Meaning what I'm doing, I'm trying to tell somebody, if you want to see the composition of income statement, please go to additional note 1. You'll be able to see the composition of the income statement. Because for comprehensive income statement, you might not disclose everything in the financial statement. So you give a summary, then of course you show us an additional note. Meaning under additional notes, under income, I can see income from other activities, income from investing activities. Then I'm shown interest that we received or the dividends that we are given. If we are working on expenses, note 3. If I go to note 3, I'll be able to see admin expense, electricity, water bill, depreciation charge, etc. But in somebody has told us, if you want to understand other expenses, go to note 3, presentation and disclosure. Meaning, under presentation disclosure, this is how well the financial statement has been disclosed for the purpose of understanding. And that's all about the financial statement as such. Please, you might forget much of what you have been learning, but please don't forget this and what I'm going to introduce now. With that understanding, now we are going to techniques. So come up on their network now. Please work on your network now, because this area I don't want anybody to miss. Techniques, ways, stroke methods, stroke procedures, of gathering evidence. Techniques, ways, methods, procedures of gathering evidence, or substantive tests. Or substantive tests. Meaning, somebody might talk of techniques of gathering evidence. Sometimes examiner will ask you ways on how you got this information. Somebody will talk of the method that you use to gather this evidence. Somebody will talk of procedures of gathering evidence, or the examiner will talk of just substantive tests. When the examiner talks of substantive tests, is referring to the same information here. And now, we have several ways, methods, techniques of gathering evidence. Please announce me. They never change. They always remain the same. Techniques, methods of gathering evidence. And I can give you our no more vowels to help us remember. Maseke, do you remember vowels? It's like class 3. Tukiwa class 3 tuko tunasomeshwa vowels. Do you remember them? Bernard Obido, do you remember vowels? Mwalimu wajua sasa hiyo ni kizungu, sasa hapa tunafanya auditing and assurance. Sasa umetupeleka kwa kizungu. Ni sawa sawa tu. Ways, vowel.
O-U.
Exactly. Yes. Diwa, exactly. Yes. A, E, O, U. We can talk of analysis. We can talk of inquiry. We can do inspection, we can do observation, we can do recalculation, we can do analytical, review, procedures, that is ARP. So ukisikia nimesema ARP, I'm referring to analytical procedure. This is 1, this is 2, this is 3, this is 4, this is 5, this is 6, we have 7, circularization. Circularization or third party confirmation. Third party confirmation. Now, after you've done everything, request, management, representation, letter, request, management representation letter, number 8. Actually, number 8 may make us stand. You always remember, after you've done everything, request, management representation letter. Techniques, ways, methods, procedures of gathering evidence or substantive tests. Please take your time, ponder that. Announcement 1. This never misses in your exam, including what we are waiting next month. Announcement 2. This never changes. What changes is the subject matter. Some will talk of a technique and give you a different subject matter. Another person talk of ways or method. He will give you a different subject matter. Meaning you can have question 1, someone asking technique of gathering evidence. Question 2, examiner ask you the same technique of gathering evidence, but this time around different subject matter. Question 5, you can also find another technique set there, but different subject matter. Meaning for the purpose of exam, please, this never changes, it remains the same. Starting from where we have discussed today, even the next level that will be meeting our level 6, we'll still be working with the same techniques. They will never change. Meaning, if I come to your organization, I'm coming to audit, and I want to confirm the fiscal existence of assets, I'll do inspection. If I'm in class and I'm trying to explain how to confirm existence of assets, of course, I'll tell you need to do an inspection. I've given you the financial statement, the purpose of audit. Somebody else has given you the minute books of the company, and you are expected to gather sufficient appropriate evidence. Listen, somebody, you will use inspection as a technique of gathering evidence. I think you cannot note, I've used 3 subject matter using the same procedure of inspection. Meaning I can inspect physical assets, I can inspect the financial statement, I can inspect the minute books of the company. I'm doing an inspection. Meaning, ways, methods, technique of gathering evidence, they never change. What changes is the subject matter. Now let's do this. I prepared financial statement here deliberately because I knew we needed to work on assertion and also to work on this. When you give me the income of this organization and you want me to audit, the first question that I ask myself, last year, the income was 250. This year, the income is 300. There's an observation I'm just not there. the income of this organization has increased from 250 to 350 this year. When I was also evaluating, I also noticed something. The income for 2023 was very high compared to the income for 2022. But something so interesting I've just noted, the profit before tax by the end of the day for 2022 is higher compared to the profit for 2023. So I need to understand, where is the problem? How comes this time around our income was so high and yet by the end of the day our profit is a bit low compared to last year? So as an auditor, I need to understand what exactly went wrong. Is it that maybe the cost for last year was suppressed, or is it possible the income of this year is overstated? Now, what I'm doing now, I'm doing analysis. Meaning, analysis is a technique of gathering evidence. I can do comparison. I'm comparing last year, this year. I'm drawing a conclusion, meaning I can analyze two documents. I can analyze two statements. I can analyze two financial period and draw a conclusion. After noting this, there's something else I noted. In our non-current assets, last year our current asset, non-current asset was 550, this year is 600. What might have happened? Means it's possible we have acquired new non-current assets. So I will need to confirm. Because of that change, I've just done analysis. The only way you can increase your non-current asset is either you have done a new acquisition or there is revaluation of an asset. So I'm going to do analysis. Now, after that analysis, I can inquire. I've realized your asset has changed. What exactly happened? I'm doing an inquiry. Can I get the asset register to confirm any possibility of new acquisition in the asset register? I'm doing an inquiry. When I noted the income increased from 250 to 300, I inquired for the JVs from January JV up to December JV to see exactly what had happened. I've done an inquiry. Once you give the document that I'm asking, I will inspect them. I'm doing an inspection, meaning I'm inspecting to confirm the physical assets. I'm inspecting to confirm the correctness of this document that I've given me, meaning I'm using an inspection as a technique of gathering evidence. If I want to see these physical assets, whether they do exist, I'll inspect. If I want to understand this liability is there, I want to inspect them. I want to confirm something in the income statement. I'm initiating my own procedure. I've also attended, when you are paid your employees, I need an observation. Meaning an observation, this is whereby I'm trying to gather circumstantial evidence. I'm trying to confirm activities as they take place. I want to confirm, I'm trying to witness activity as they take place. Announcement, somebody. We observe internal control system. We inspect physical assets and we inspect documents. So in the part of exam, when you are observing financial statements, I don't expect that for exam, when you were inspecting the internal control system. No, you can only observe internal control system. You can inspect physical assets, you can inspect information in a written document. I'm doing inspection, I'm doing observation. Now, after I've done my inspection, someone has given you this document, I can as well recalculate. I'm trying to recalculate, confirm the valuation and accuracy. Meaning, I'll take an item in the financial statement, recalculate, because somebody gave me some totals. I know for you to add this carrying amount, you add cost of asset, you add accumulated depreciation and net value. So can I calculate the depreciation charge for the year? Then once I get the depreciation charge of the year, I add to the previous accurate depreciation to get the total accurate depreciation. Then I less from the cost to confirm what we expect as our carrying amount. I'm doing recalculation. Something else I saw. And the other expenses, last year we had 20,000. This year we have 20,000. It means this expenses for last year, this year is the same, no change. What if I want to confirm previous years? Meaning I can go back the previous year, 2021, 2020, 2019, I can go back previous to confirm changes. Meaning I'm doing analytical review procedure. Meaning an ARP, this is whereby you are interested on change over time. Our last year income was 250. This year is 300. What if I go to previous year 2021? I go to 2020, 2019. Now, when I'm trying to confirm the changes over time, I'm doing analytical review procedure. I'm interested on moving averages. I'm interested on time series. I'm interested on change. Now, I can do analytical review procedure to confirm for the last 5 years how this organization has been performing. I'm doing an ARP. Meaning, analytical review procedure, this is a procedure that is used to confirm change over time. It's a procedure that is used to calculate ratios. It's a procedure that is used to calculate moving averages. Is a procedure that is used to calculate or to determine relationship. From 2018, 2019, 2020, 2021, 2022, now we are 2023. What has been happening? I'm doing analytical review procedure. Now I can also do circularization. Now, under circularization, this is whereby you are getting information from a third party. That's why we are talking about third party confirmation. If you can't remember circularization and you try third party confirmation, you are absolutely right. Now, you circularize information outside the organization. You don't circularize within the organization. The most used circularization method is data circularization. Now, under circularization, we have two types of circularization. This is sample. We have negative circularization. And number two, we have positive circularization. Meaning we have two forms of circularization. You can do negative circularization, you can do a positive circularization. Listen, negative circularization, this is whereby a reply is expected only if you don't agree with a circular. Positive circularization, this is whereby a reply is a must. Here, a reply is a must. Meaning, under positive circularization, here, this is whereby a reply is a must. Negative circularization, this is whereby a reply is only expected if you don't agree with what is contained in the circular. I hope somebody you are following. Meaning, under circularization, sometimes example we talk of negative confirmation and positive confirmation is the same thing. But what you need to understand, a negative confirmation or a negative circularization, this is only expected when you don't agree with, meaning the person who is being circularized or the data is only expected to reply if only you don't agree with what is contained in the circular. Now, the demerit of negative circularization is that chances are someone might not get this circular, meaning the circular might not reach to the data, and your assumption would be that they are in agreement with the circular. By the fact that you will not get negative. Now, the beauty of positive circularization, this is coming to address that problem whereby a reply is a must. Now, you can only do negative circularization to a person who has small balances, to a person who maybe you have some information about, you understand that person, you know that person. Now, a reply where a positive circularization, whereby a reply is passed, this one is done to people who have a large balances. You can do with someone who used to trade your business, meaning as a regular balances, but this time around as a nil balance. You can circularize any person who you don't have more information about. Then finally, after you've done circularization either way, you are expected to request management representation letter. Meaning, after you've done everything, somebody requests management representation letter. So every time, ukisikia techniques of gathering evidence, procedures of gathering evidence, please don't forget requesting management representation letter. You request management representation letter just to help you to confirm or to increase the credibility of evidence that you gather. And I think that is very, very clear. Any question? Any question? Take 2 minutes. Check whether there is anything that you need to ask before we go to the next item. Any question? Now, silent means you guys, you are good to go. Please remember, this is an area that you'll always find in your exam. This is an area that you'll never miss in your exam. Please make sure that at least you understand everything. Now, for you to audit this, when you are doing substantive tests, if you can remember, now this was section 6, whereby we are discussing approaches of auditing. There's what we call substantive testing. Now, substantive testing is whereby you pick an item in the financial statement, then you fall back to the original document. When you are doing substantive testing, you are interested on the correctness of disclosures, meaning you are working on assertion. Remember we said assertion, this refers to any statement or a representation made by management when decided to include or to exclude an item in the financial statement. Then you have said 3 categories: financial statement assertion. You have said we have assertion about account balances, assertion about class of transaction, and assertion about presentation and disclosure. Any questions? Now, silent means there is no question. And if there is no question, then I want to introduce something else. I want someone to help me to remember. Do we discuss forensic investigation? Isabella, did you work on, I think we did the forensic investigation. Is it here?
Yes, we did.
Oh, good. That's excellent. So, then if you have understood this, we have like 3 minutes. We have like 3 minutes to go. I'm trying to figure out, should I start something today or maybe I stop there? I'll be sending those notes or be sending those notes for you. Other than this, we need to discuss internal audit function. Oh, Mwalimu, what are the elements of letter of representation? Now, actually, we talk of content of the representation letter and why they are important. Vincent, don't worry, that is coming. We'll be discussing them. That is content, what we expect to see in a representation letter. Remember, a representation letter, this is a letter that is used. A representation letter is a letter that is used to support any form of oral communication. It is also used to affirm that the financial statement draft that the organization has given you is correct, meaning ideally we say a representation letter is a letter from the management to the auditor, but it is written by the auditor, signed by the management as affirmation of that the financial statement draft that they have given you, they are correct, and the assumption that they have given you the financial statement, they are appropriately disclosed. So, of course, that is coming. So don't worry. Vincent, don't worry about that. Now, an internal audit. Internal audit. Now, an internal audit, I think I can just mention this, then we call it again. Now, an internal audit, this is.
Mwalimu, I have a question.
Yes, please ask, please.
Yes, I'm asking about this substantive audit test that you might use and to verify the expenditure during fundraising. It's really confusing.
Oh, okay. Somebody is asking you substantive tests. That you can use to verify expenditure during fundraising. Is that a question?
Yes.
Exactly. Now, remember what I've told you. Substantive testing, this refers to the techniques. This refers to ways. This refers to the methods. This refers to the procedures that you can use to confirm information. Now, the subject matter here is expenses, to verify expenses during fundraising. Now, somebody can disclose expenses that are not correct. Meaning somebody can omit expenses not to confirm them. Meaning I can use analysis as another procedure to confirm this expense. If last year we had an RMB, this year we have an RMB, I can do analysis and confirm. Last time, how much do we spend to prepare for this RMB or this fundraising? What of this year? Or maybe this organization, they had fundraising. There's another organization also, they had their fundraising. How much they spent? Because it's possible somebody can omit expenses. Meaning I'm using analysis as a technique to verify that expenditure. Number two, I can do recalculation. Meaning some are given me some figures here. 150 plus 125, 135. Here given me amount here. So I can do recalculation where I'm adding all this to confirm correctness of that. Number next, I can do inspection. Now, when I'm inspecting those transactions. I'm trying to inspect them so that I can calculate them. Now, I'm inspecting document. When you came up with the total expenditure, you prepared total expenditure account somewhere. But before then, you had a JP. So what can I do? I can inspect whatever is contained in the JP with what is contained in the GL. I'm doing an inspection. Now, in this expenditure, it's a disclosure in the financial statement. Remember, we are doing our substantive test. Meaning we are falling back to verify the correctness of that. I can do performance. I can do inquire. etc. Meaning the only thing that you cannot do is observation. Whenever unaweza kufanya observation, but you can do the rest. Have I answered you, Ben?
Yes, Mwalimu, but what about this issue of income? The audit test that you can use during income from fundraising, that was expense. What about income?
What about income? What you need to understand, income, the only way somebody can mistake income is by overstating this income. So I want to confirm the correctness of the income. Now, this was expense that we are doing. This was our subject matter. Now we add income here. In this income, I want to confirm occurrence period. How will I confirm this occurrence? I will inquire the management. How did you arrive at this income? When you came up with this income amount, of course, there are some figures. X akatoa a certain amount, Y akatoa a certain amount, J akatoa a certain amount. I can recalculate them. I can recalculate. There's a certain amount that was done somewhere. These people, they raised 500 million. These people, they have done 500 million. What have they done differently? Why we have these barriers and yet there's the same people? I'm doing analysis. Meaning, I can do reperformance. Meaning, I'm using the sector of techniques, but different subjects matter. The beauty of your question is that now this is an expenditure, this is an income. Now, when you're working on this, you're working on assumptions about process of what? Transaction. You want to confirm occurrence. What are you confirming occurrence of? Income. Do you want to confirm completeness? You use completeness to ensure that there is no omission. What are you working on? Expenses. I want to confirm classification. Now, I want to confirm this income. Have they captured the right income, the right class? Expenses, have they captured the right class? I'm analyzing. Confirm the same. I want to ensure cutoff. Meaning all the income, all expenses that have been captured within the expected period. Again, I'm using analysis to confirm that. I can do an inspection to confirm that. I'm cheating the second procedure, I'm subjecting the procedure to the assertion, meaning we are using assertion, we are using our own techniques to the subject matter that is our income statement to confirm the assertion. And that's why to get at the next level, the difference between what we're discussing now and what we'll be discussing the next level is that in the next level, you have to give me the finding. I'm initiating on procedure on this subject matter, and these are the findings that I got. That's the difference. This level, some will expect inspection, observation, recalculation, and performance, etc. But the next level that we are going to section 6, you have to give us a finding. How did you get this information? Have I answered you, Bwana Bernard?
Yes, thank you.
Karibu sana, karibu sana. So, is there any other question? Now, assuming that there is no other question, we will stop there. In our next class, that is tomorrow, we'll be working on, we'll discuss internal control system. I'm also feeling that we need to work on sampling and sampling techniques. I feel we also need to work on subsequent events, post-balance sheet events, and going concern. That's something else that we also need to work on. Then there is also issue of cuts that we need to work on. So tomorrow we have quite a lot that we need to work on. Then from there, I've got like, I think I need, other than tomorrow, we need an extra like 2 classes, and you'll be able to finish our syllabus and be back to our revision. So thank you for your time. Thank you for your participation. At least today, you have maintained your presence, and that can't be taken for granted. So I take this opportunity to congratulate you and wish you a lovely evening. Thank you. Let's meet tomorrow.